Hi, everybody. Good morning. Welcome to our third panel discussion of our veterinary venture series, Navigating Practice Ownership for Female Veterinarians. And today we are going to be talking about retiring from practice and how do we transition. So all of the questions associated with that. So for those of you who don't know me, I'm Dr. Marie Holowaychuk. I'm an emergency and critical care specialist and passionate advocate for veterinary well-being, and also very much an advocate for female practice ownership for many, many different reasons, not the least of which is that recent research definitely shows that practice owners tend to have lower levels of burnout and higher levels of well-being compared to practice associates. So we talked about a little bit about that in our last session, but that was really the impetus for beginning these sessions in collaboration with TD, who was our sponsor. So thank you so much to TD for making these sessions happen. So for those of you who are attending, I invite you to introduce yourself in the chat, just who you are, what you do, where you're located, whatever you feel comfortable to share. Your questions will be welcomed throughout our discussion today. And while you are getting yourself situated and also introducing yourselves in the chat, I am going to go ahead and introduce our panelists for today. So we have Ramel from TD Business Banking, and I'm just realizing that I don't have my bios pulled up here. Oh my goodness gracious me. Okay, here we are. Just give me 1 second. Okay. I had a little bit of technical challenges logging in this morning, so okay, so Ramel. Ramel has over 17 years in banking and has spent the last 6 years providing financial solutions for healthcare and business professionals. Ramel has developed strong expertise and knowledge of the industry to bring solutions that meet the banking needs of healthcare and business professionals, no matter what stage of their career they are in. He takes pride in providing timely advice to his professional customers, and together with his team, is committed to helping you along the path to success. He is also a proud parent, fur parent, to a cute little dog named Rosie, a teacup poodle. So we also have Mansi. And Mansi Patel has over 20 years of experience in banking and has developed the expertise and industry knowledge to work with healthcare and business professionals and providing them with solutions to meet their goals at every stage. Mansi and her team at TD are committed to working with veterinarians by taking the time to understand their business and advising them on tailored solutions throughout their career. In her spare time, Mansi enjoys cooking and experimenting with vegan food for family and friends. Then we have Ross. So Ross Aberdeen is with over 30 years in banking. I think there's like 100 years of banking experience among our panelists today. Ross Aberdeen has spent the majority of his career as a mid-market commercial banker. He has spent the last 8 years specializing in solutions for healthcare and business professionals, providing expert advice and custom-tailored solutions. Whether those veterinarians are in school, starting out in their careers, exploring practice ownership, or looking towards retirement. Ross is also a proud pooch parent to Guinness, an 8-year-old Shih Tzu, and spent a large part of his youth on family farms in the Grey Country area of Ontario. Beautiful area. Okay, and then we have Nicole. And I don't know, for whatever reason, Nicole, oh, okay, that's it. There we are. Okay, let me scroll down here. There's Nicole. Okay, I will get it together today, eventually. Nicole is Director of Tax and Estate Planning and Head of the Professional Practice Group at TD Wealth. Nicole brings a wealth of experience to her role, having practiced tax, estate, and corporate law in leading national and boutique firms. Nicole earned her law degree at Osgoode Hall Law School and was called to the bar in Ontario in 2005 before completing all 3 levels of CPA Canada's in-depth tax program. Wow, it's very impressive, Nicole. She holds both the Trust and Estate Practitioner and Chartered Life Underwriter designations. Nicole has been featured extensively in the media, providing insights for media outlets such as BNN Bloomberg, the Financial Post, and the Globe and Mail. I am very impressed with all of our panelists today, and I'm really excited to dive in. So with that said, I'm going to stop sharing my screen and welcome everybody again. For those of you who are just joining us, again, please feel welcome to introduce yourself in the chat, maybe who, where you're working and what it is that you do. And of course, we invite questions throughout our panel discussion today. And I'm going to give us some questions that have circulated a little bit before our session began today. And that first question is going to go to Nicole. So Nicole, I think about, friends of mine who are really strongly considering practice ownership, who have become practice owners. When should they be thinking about retirement planning? A lot of them are, sort of my age, so in their 40s, their children are getting older, they're starting to think about the next stage of their life. When should that start, that planning?
If it hasn't already started, then today, it should start today. Because ultimately, when we're thinking about retirement planning, we're doing that in the context of the overall goals. Like, what else are we trying to achieve in life? We're not just trying to retire, we have other objectives as well. And we'll have to make trade-offs when we're deciding what to do with our money during that time. And so having a really clear eye on the idea that one day we will be retiring and we'll want to be accessing different sources of income. How are we going to fund it, whether it's going to be through registered accounts, non-registered accounts, through money from our corporations. And so there's a lot of different decisions that need to be made now in order to set you up for that opportunity to really maximize your retirement options, to maximize the income that you would have in retirement, to minimize tax as we go, so that there's more investment money to be earning income between now and then. And so I think that now is an ideal time. We certainly don't want to be waiting. Although if there's anybody on the call who has waited maybe a bit too long, don't fret. It's not too late. There are always things that can be done to either to your investment holdings, to your corporate structure, to even the spending patterns or habits that you have to put you in a better position for retirement. So yeah, I would be saying, if not already, then this is something we should actively be thinking about. You're never too young, never too young. We live in a world of compound interest, where the longer the money stays in and continues to be invested, the better the results. So the earlier, the better.
Yeah, so helpful. I remember when I got my first job, I was in academia at the Ontario Vet College, and it was like my first time making real money, because as a intern and resident, you barely, you don't make living wage. So it was like I had all this money, and I didn't know what to do with it. And I remember getting asked the question by an advisor, when do you plan to retire? And I was like, I just started working. Like, I'm not even thinking about retirement. So I love that for anybody watching and listening, if you have not already started this planning, it's today is the time to begin, no matter how far off that feels.
I could just interject just really quickly, because when we talk about retirement planning as well, like, what are we talking about? And it's much broader, right, than just a retirement plan. So if you are moving in with a spouse, maybe you are starting up your corporation, whether or not what your shareholders agreement might say, and yes, you may have a shareholders agreement even if you're the only one. What your cohabitation agreement say, your marriage contract say, all of that is going to impact the types of decision that you're making for retirement as well. So it really is a very broad, we can come at it from a bunch of different doors. That retirement is something that we always sort of have to have there, regardless of what else we're thinking about or doing.
Yeah, I hadn't thought about all of those factors. So thank you for pointing that out. So much to take into account. And of course, that's why we lean on experts like you to help us. Okay, well, my next question then, this one is going to be for Mancy. As a practice owner, I've got debt related to the practice and aspirations for retirement. What is the best first step? Who do I get in touch with? Like, where do I start?
Yeah, no, that's of question that ponders all of us, right? Where do I begin when you have, excuse me, the retirement, the big piece, like Nicole said, which involves a lot more than what we think it might does. So the first and foremost, I'd welcome everyone to contact one of us. So either myself or one of my colleagues, and we're actually a national team. So we're all across Canada, no matter where you're located. So what we do in the first call when you're in contact with us, so we'll have a call to discover a bit of where you are in your process and or what you have, whether it's for debt or aspirations to where you want to be, right? Where the goal is, near or far. And we try to make sure that we have the correct fit of the person. So whether it be, in wealth, such as someone like Nicole, or it could be someone in the branch or whichever it may be, could be for a personal mortgage, right? So it could be for anything, literally, but we want to make sure we connect you with the correct individual at the point in time in the stage where you are at. So that's what we will do and ensure that we work with many healthcare professionals along the careers, and we'll make sure that they have the right guidance and so forth to assist you in triaging and guiding you in the right direction, basically, because the direction is a key in terms of what your next steps will be to executing the plan that you have to get to your goal. So yeah,
Okay, so
you'll give us the details, and we're happy to take those questions and calls as well.
yeah, so it sounds like just connecting with the bank initially to just have that introductory meeting, lay it all out on the table. I've got the mortgage, I've got the practice, I've got, like Nicole said too, these partnerships and agreements and other things. And what is the biggest need in this moment? Right. And then how do we connect you with the right person?
Exactly. Yeah.
And then behind the scenes, we're all working together, right? We are, whether you're on the banking, financing side, whether the investment side, the planning side, we are all behind the scenes, connected to each other. So regardless of who you're encountering on that first contact, we know we can provide that support. So yes, it might be on a particular banking issue or mortgage, but you would have access to the expertise within the organization that can help figure out the next steps after the first step.
Exactly. Yeah, it's almost like a team holistic if you're kind of bringing the bank to you, so that you're not kind of having to go and try to find the pieces of the puzzle in terms of where do I begin. In fact, we'll just bring them to you, right? And then when and where you need them. So I think it's important to note that we're all across Canada, and we're a team of individuals that worked alongside with each other. Yeah, thanks, Nicole.
I love that. I think of it as kind of like going to a specialty veterinary hospital and the whole team is kind of working behind the scenes. Like you might connect with the ER doctor, but there's a whole bunch of people behind that have their areas of expertise that they might be consulting with. And you might not even know what you need, but then it turns out you need to see a neurologist or whatever. So that paints a really good picture. Okay, Nicole, so let's say that I'm going into a meeting and what should I be thinking about before I get there? Like veterinarians, most of us are type A personalities. We really like to prepare. We like to be ready. We don't like to be like hit with anything that we didn't expect. I know for me, I don't like it when I go into a meeting and I'm being asked a bunch of questions and I'm like, I didn't know I was going to have this information. I would have come prepared. So like what sort of things should we be considering in terms of the practice, and everything else, our children's education, mortgage? Okay. Lay it out.
This will probably be a rather long answer, but firstly we start with, don't let perfect be the enemy of the good in this situation, right? If you can't put your hands on that particular document, or you don't have the most recent statement, or you're just not, just take the meeting, because that's going to be the next best step. And my favorite phrase is directionally correct. Are we directionally correct? And if so, then we can keep moving in that direction. And if not, we know we need to pivot really quickly. But if we're thinking broadly about, or we want to think about our retirement, we want to think about our wealth management as a whole, what do I need to be thinking about? So primarily, if you can give some thought to what your goals might be, what are you trying to achieve? Is it saving for children's education, paying down your debt, saving for your retirement, making a major purchase? All of those, if you can have an understanding of what it is you're trying to achieve. At the same time, if you don't know that, that's the purpose of the meeting as well, is that we have the experts to do what we call, our due diligence, do a deep dive, a discovery process, and make sure that we really understand what it is that's important to you. So we do have our own sort of tools that we might use as part of a checklist to go through that information. But we would for certainly be thinking about things like, when I think about maximizing my wealth, we have RRSPs. We maybe have RSP contribution room that we're able to use. You could have acquired that in many different ways, not just through employment. Perhaps you have a rental property. That income is also going to be potential contribution room for your RSPs. So being aware of what your contribution limit might be. Similarly, for tax-free savings accounts, your TFSAs, these are just incredibly effective accounts, particularly for retirement. Because of the amount of flexibility that they provide, you're able to essentially pull that money out tax-free in retirement. It doesn't impact any of the other government sort of benefits you might get for CPP or old age security. You're not going to have a clawback of your OAS if you're funding things through your TFSA. So if you haven't yet maximized that, making sure you're aware of what your contribution limit is, so that whoever's helping you figure out where that next best step is for the dollar that you're going to be putting in, your TFSA is likely going to be something that we're really strongly looking at. We'd also be looking at, for example, first home savings account. Would you be qualifying as a first home buyer? If we're deciding between saving for retirement or funding our home, we want to be maximizing the amount of registered accounts. Registered accounts are gold. Because we have tax deferral, right? Money is growing tax-free within these accounts. And sometimes we have both a tax deduction. We may have, so that we're not taxed on the money that's put in. We may be able to pull that money out tax-free, or deferral, pay tax at a later date. And for things like an RESP for education, savings for your children, there's government grants and bonds that even just opening the account may provide an opportunity for you to be getting free money. And so when we're looking at that initial conversation about what should I be doing, what should I be bringing to the table here, it's literally all of the documents and statements, again, your marriage contracts, your shareholders agreements, any other sort of agreements, even business agreements that you might have, that we can then collectively look at that and say, how can we help navigate you through this process? You'd also want to be having a clear sense of your budget, right? What are you spending and what are you spending it on? What are the tax rates that you're currently being exposed to? Interest rates that you're currently paying on any debt that you may have? What type of debt is it? Sort of how do you feel about that debt? Sometimes it's not just the math, right? It's the emotions that we have with respect to some of these decisions as well. So I would be saying to bringing to that initial meeting, if not a checklist, which we have access to if you're meeting with one of our financial planners, for example, or investment advisors. They certainly have a checklist of information that they would be asking you to bring along with you. And it would include all of these things. And sometimes it gives you reasons why they're asking for it, sometimes not. But essentially looking at everything from the broadest possible perspective. And it's more of I think the value is really in the exercise as opposed to necessarily the answer that you're going to get. You're not going to get a quick answer for a lot of these issues, but taking that time out to pull all of your information together, all of your statements, all of your documents, and bringing them all together. But again, if you don't have them, still show up to the meeting, because that's the next best step. And it won't be a wasted meeting. There's always going to be value, because that person may very well say, I can work with your accountant, I can work with your lawyer, I can work with your other external people to get this information to me. And it really does depend on your circumstances, but we might be able to actually help you with the strategies of how to get that information together without it causing too much of a challenge.
Mm-hmm. Wow, that's so helpful. I love what you said about the debt portion, just with regards to how you feel about it. A lot of our veterinarians are graduating with student debt. Most of them are, and for some of them, quite a large amount of student debt. And I have spoken to some veterinarians that are like, I'll be paying my debt off until I retire. Like, I'm fine with that. Like, it's not a big deal. And then I have others that are like, I just wanted like this chapter of my life to be over. Like, this has to be the priority for me in paying down this debt. So you really do need to take that into account. It might not always be like the financially right thing to do, but if it's really emotionally weighing that individual down, then maybe that shifts the priorities around. So definitely thinking about those goals is really important. Thank you for that information. Mancy, so I think Nicole just briefly mentioned interest rates, considering the interest rates. I wonder if you can comment on the interest rates change. I was listening to the news this morning, and I think it's coming out this morning, the new interest rates, they're going to be announcing them for those who are watching this live. So how will an interest rate change potentially impact financing or retirement? Can you give kind of like a broad synopsis of that?
Yeah, actually, they did reduce it by 0.25% today. So good news for people that are on the call and anybody else, actually, for everybody, all of us actually, who are holding debts. So it's a good question at the right time that we're having this conversation, because it can potentially impact both topics of financing and retirement in several ways, how you look at it. You have, if you're on a variable rate where it's open, it directly impacts the payments that will be paid towards. They're going to give some cash flow back to you. So there's a couple of things that could happen which could correlate to retirement or how you want to proceed and achieve your goals. So if the rates come down, what happens is you have that additional cash flow either back to you from your bottom line, which you could then invest, or potentially, like you said, if there's an emotional attachment that's dragging someone down, you could always consider speaking to your banker, and paying it down quickly if that's the burden that you're carrying. And your question is, I want to pay this off early. We can help you strategize that, right? Or is it, can I take this additional cash flow and put it to investments where I could, get better return potentially. So there's lots of different ways. So the interest rate definitely impacts both scenarios, actually all scenarios across the bank, across the board, in terms of personal and business life. So having individuals such as us or the bank to speak to when things do change can help. And then when interest rates drop, like today on a variable, your fixed rates are getting cheaper, right? So if you would like to fix something, the bond moves in a way where you're able to fix it for a term where you have a consistent amount that you will be paying, which kind of, if it's, I'm throwing a number, if it's 11,000 monthly, that you have this commitment, but you have additional room, right? So you can take that and plan and strategize to be able to put it towards what your goals are. And that could be retirement. That could be, let me save a little bit more, or let me pay off this loan quicker, right? So whichever way that you're connected to and where you want to get to, we can help navigate you when these things do come up and interest rates change. In this scenario, it's a good change. It's a little bit lower. So we all get a little bit of a relief today. Yeah.
Yeah, that's very helpful. I between dropping my daughter off at daycare and getting started on the webinar, I must have missed the announcement. But when I listened to the news early this morning, it was coming today. So that's great news. Thank you for sharing that. So Nicole, what about on the investment side? Like, what does that mean with the interest rates and other things we should be thinking about with those fluctuations?
I was muted. I muted myself.
That's okay.
The interest rates are going to, when they go down or up, it does impact the type of returns we might be seeing on our investments, depending how we're invested. There's lots of different ways that could potentially show up. But when I think about it, when we're doing our calculations, say we're tackling that question is, do I pay down my debt, or do I take that extra money and put it into my retirement savings, for example? The math will change with that. So as the rate goes down, we then look at what is the return, right? The after-tax return on those dollars, whether I'm paying down the debt or whether I'm invested. If you are invested within a tax-free savings account, for example, you are comparing, you're essentially paying like dollar for dollar. The comparison is really easy to make, that how much would I need to earn in my TFSA tax-free in order to beat the result of paying down my debt and the interest that I would be paying on that debt. If, however, I'm invested in a non-registered account where I am taxed on those dollars, I'm going to, the return I may get by paying down my debt, I need to substantially beat that in the market in order to have a after-tax result that is similar. So it's very directly tied to it. And I would suggest from a retirement planning perspective that we are looking at things from, we'll have multiple pools of assets, hopefully, right? That it's not just going to either be funded through our corporations or the sale of our corporations, but also, as I mentioned, the registered accounts that you might have, Canadian pension plan, old age security, and thinking about after-tax dollars when we're tackling these questions, and that's going to impact both on the interest rate on the debt side, but also on the investment side.
Great, that's very helpful. Thank you. So Nicole, I want to also dig into options for selling the practice. So these are individuals who they're at a stage in their life, or for whatever reason, maybe even not near retirement, but they've just decided that they're wanting to no longer be the sole practice owner. What are the options for selling? I know there's a few of them. Could you go through those and just talk in detail about what those different options are?
And so I think at the core, and I'll assume for the purposes of this conversation that we're talking about today, and that we're practicing through a professional corporation. And essentially, when it comes to selling your interest in that corporation, there's really two ways of doing it. You're either selling your shares or you're selling your assets within that corp, and you have different results for that. The next question is who you're selling to, whether you're doing that privately, whether there's a larger conglomerate that is looking to purchase that. But so the variations can be on both sides. But the two sort of core ways of doing it is either selling your assets or selling your shares. Now, the reason why people who are selling generally prefer to sell the shares of the corporation is because of the lifetime capital gains exemption. And we're in this weird spot right now where we have an announcement about the lifetime capital gains exemption, but we don't have any legislation out yet. But the lifetime capital gains exemption essentially allows business owners whose shares qualify to not pay tax on a very large portion of this. So the current amount is just over $1 million of gain can be sheltered from tax. The announcement from the budget was that will be going up to 1.25 million and then indexed from 2026 onwards. We don't have legislation to that effect yet, but we will assume that would allow then for you to have $1.25 million not subject to tax. So this is a pretty relevant conversation, but there's tests. And in order to be able to access that capital gains exemption, there's certain ways that your business must be structured. So we have a small business corporations test. It must qualify as a small business corporation, which is great because we get the lower rate of tax as well. Must be Canadian controlled private corporation, and all or substantially all of the assets must be used in an active business carried on primarily in Canada. Now, for all or substantially all, that generally means 90% of the fair market value. We also have a holding period test. So this is where the shares must be held, how long they must be held prior to the sale, and for who can own them. So I mean, it's a bit simple, and the situation is generally the practice owner that would be only having the shares, but it requires that they be owned by you or someone related to you throughout the 24-month period immediately before the sale. And then there's a holding period test as well. So there's 3 tests. And this deals with the value of the active business assets within the corporation. So it requires that 50% of the fair market value of the corporation's assets must have been used in the active business carried on in Canada throughout the 24 months before the sale. The reason I keep saying these, like the 24 months, is because there is some things that can be done in advance of a sale to purify the company, to make sure that it qualifies for this exemption. But things like, for example, if you have significant investment portfolios, or if you have what's like passive assets that are within the corporation, we would want to be purifying that in advance so that you qualify for this test. And we generally need at least 2 years to be really certain that we're able to do that. So this is, if you're selling shares, your after-tax result is going to be quite positive because you're able to reduce the amount of gains. The other way of doing it is selling your assets. And essentially in this situation, there's 2 levels of tax, because if your assets are held within the corporation, there's going to be tax when you sell those when the corporation sells those assets, there'll be tax at the corporate level. And then when you pull those assets out or pull the money out into your own hands, that is also going to be subject to tax. So we have these 2 different levels of taxation to be aware of. And generally speaking, a buyer is going to prefer an asset sale because it doesn't come along with all of the potential liabilities of the corporation. They're able to pick and choose which ones they want. And so sometimes that's going to impact the price. That if you might accept a different price for an asset sale than you would for a share sale, because your after-tax result is going to be quite different. And when we're looking at the asset sale as well, how we allocate the purchase price is also going to have an impact. So you can inventory, equipment, goodwill, the goodwill of the business, land, how the price that gets put on those will have a different outcome depending on whether, for example, it's goodwill that the purchaser is buying versus inventory. The after-tax result is going to look a little bit different as well. So those are sort of the 2 primary ways of doing it, both of which I would suggest require an analysis well in advance to make sure that we, again, you're setting yourself up now and you're structuring your affairs in a way that makes the business as profitable to you when it comes time to sell as possible. And that if there is anything that needs to be done in terms of, there's ways that you can increase the price of your business. For example, how the management and the operations and the way that if you have employment agreements in place, for example, or contracts with third parties, all of that is going to be coming in as part of the question about the purchase price. So lots to think about, lots of different ways to do it. And then ultimately, at the end of the day, it's really up to you who you want to be selling your practice to. And some people, again, have not strictly financial reasons for the decisions that they make. If you're in a smaller community, for example, you might be very aware of the impact of who you're selling to, and whether there's terms in those agreements that go beyond simply the purchase price. It may extend to how the employees are treated, how the community will be treated, and what that business will look like beyond you as well.
I just want to highlight Shannon's comment in the chat here. Nicole, this is very important information for owners. Thank you for breaking down this very complicated discussion, very informative. I think it's true. It's just so many things to consider. And clearly this is not like I decide to sell my practice today and it happens before the end of the year. Like, this is like a process, and there's so many things to consider to set yourself up for success. I mean, obviously sometimes situations arise where we don't have that much time, but if you do have the time and forethought to connect with someone like you who can make sure that all of these things are in order, so that the practice owner can have the biggest financial gains from the sale of the practice and consider all of those different options in terms of who they wish to sell to. I know that there is the option to sell to another veterinarian, like to sell it privately. There are consolidators out there to sell to. There's the option to bring on shareholders, equity, many, many different things. Do you have anything else to add in terms of those different options?
Yes, so part of the issue there is generally, the real question is who can afford to buy your business, right? Who can afford to do it? Do they have their own source of financing? Perhaps they don't. Oftentimes we look at, and it's interesting because the budget last year and this year as well, the federal budget also talked about employee ownership trusts, and that's a new different type of structure that's being introduced, but it's really being introduced to figure out how can you fund the sale of the business to the people that you want to, and you could potentially be funding it through future cash flow. There's ways of doing that you are essentially taking on that loan. But there's also ways, and Nancy may have thoughts about this, in terms of financing from a potential buyer, having that knowledge up front about what they might be qualifying for, how they could make themselves a more attractive borrower to either the bank or to private lenders. That's all going to be kind of an important factor as well. I don't know if you see different types of those buyers, Nancy, and what we might be highlighting people to.
Yeah, no, I think we briefly or had some chats about this in the first seminar as well, and the second where we kind of outlining some of the buyers and what the banks will look for, and potentially talking to us through the process or as you're thinking to purchase, what the banks would require and kind of better prepare you or what you could potentially qualify for. Essentially, when we look at the practice, the practice is generating X amounts of cash flow, where we're kind of going to dissect it with the buyer that's purchasing the practice, and going through some fine details and ensuring that we're giving them what the practice can hold. At the end of the day, the practice should be managing its own debt type of a thing. But every situation is quite different because the buyer, like you said, is different. Every buyer is going to be coming to the table with a different situation. So we will be there to help guide that conversation and kind of look at the different options for them in terms of what can they qualify for? Is there a certain amount of, is there a VTB that may be involved, or is there a vendor take back where you wait? The purchaser, the seller is going to wait there for a couple of years. And then there's also, do you have to put in equity? Most of the time, yes, we offer 100% financing, but you're looking at all different options. Ideally, you want to get to that 100%, but you're going to have to walk through that scenario with us, and we'll be there for you, right? To say what can we pre-qualify you on this practice, or is it a startup XYZ?
And the options are different as well. So yep. It struck me when you said about the period of time. So again, we've seen the changes in the to the capital gains rate, and the different rate now between individuals and corporations. And there's a way of structuring a sale, for example, where you're realizing your gain when you receive the money. Yep. And you can do that over a prolonged period of time. So you might be able to, for example, receive part of the purchase price and be able to use that $250,000 lower inclusion rate for capital gains and do that over multiple years, which potentially would give you a greater after-tax result. So there's a number of different strategies that, depending, if you have an ideal buyer in mind, yeah, that's where we can really sit down and partner with you to figure out what the best way of maximizing both, your proceeds of sale so that you can be funding your retirement, but also setting up that buyer for their best possible outcomes as well. When it comes to the conglomerates, the groups that kind of come in, we've seen this in different industries as well, where there might be times where frankly, the prices don't make sense. Right? So if you're looking at the cash flow and you're looking at the dollars on the page, the value that you're being offered sometimes just might not align. And where that matters is in things like, so if you're getting a business valuation or a business valuator for different purposes, you want to be really clear what the price is what the value is that they're saying and what assumptions they're making when they do that. And it might be very different result depending on timing and location and for what purpose. So if I mentioned before about family law agreements, you might need to get your practice valued in order to be able to enter into that agreement. That value that you're getting might be, I wouldn't hang my hat on that as the price that you might receive from either a private buyer or a conglomerate. That's a price that's for very specific purpose. And so when it comes time to really understand the value of your practice and what it might be worth to potential buyers, this is where we're stepping back and saying, okay, who are these potential buyers? What is that different price? If you're seeing different prices, what is it based on? What assumptions are built into that? And what can we do in terms of planning to maximize that? Because a higher price might actually not be the best result for you when we take all of the other factors into consideration. So it really is important to look at the fine print, I would say.
Yeah. To further touch on the right buyer, as Nicole mentioned too as well, it might not just be a factor of who pays them the most for your practice. There's also a legacy play when you're looking at selling your practice. You spent a long time building up this practice. It's a part of the community that you've serviced over your whole career, and you want to make sure that that person that comes in and is going to carry on the work that you've done within your community will carry on what you've built, and they're not going to tear down all the work that you've done over that time. So that could also be a consideration when you're looking at who the right buyer is. You will probably still live in the community that you serviced, and so you want to be mindful of that. Like how does that new buyer integrate well into your practice, what you've built in the community too as well.
Yeah, such a nuanced conversation and so many things to consider. I think about my parents. They owned a companion animal practice for 4 decades in the community where I grew up. And there was big discussion around whether I would purchase the practice or, whether it would be one of the associates who was working there or a group of associates. And, ultimately they did make the decision to sell to a consolidator. And they've been very happy with their decision, in the way that it has shaped up in the community. And like you say, there really is that huge piece of legacy. I think they would have loved for it to be me and for, to carry on the family name, and for various reasons, it just didn't work out that way. But there's so many things to take into consideration, and not just for the legacy piece, but it sounds like, based on what you're saying, Nicole, even financially, it may not be in the long term the right decision to just take like the highest, price sale. So that's really interesting. I hadn't thought about it that way before. So, when it comes to making this decision, I know that you mentioned valuations and everything else. Like, where is the best place for practice owners to go to find those reliable and unbiased resources? I'll put that over to Nicole, and then anybody else who wishes to comment.
So this is not what often said, but I'm a big fan of the CRA and Government of Canada websites for for information on the really technical pieces where they have a lot of information that they can give you. Just again, if you want the unbiased, this is the pure facts. There's some really good resources available on those sites. I would then say ours as well. So TD has a few different ways that we share information and communicate with our clients. One of them is the Money Talk Go website, where we put a ton of information, lots of different articles and discussions about these sorts of topics, and what's important. And then working with an individual advisor, our goal collectively as an organization is to allow people to make the best possible decisions for themselves that they can with the information that's available. So it's actually one of my colleagues can coin this phrase: we don't advocate, we help you navigate. And so this is what we do and love, and we really don't have the skin in the game. This is, so people like me, for example, this is my great joy, is that I get to create this content and information completely objectively on, to allow our clients to make the most informed decisions for themselves. And we trust that, at the end of the day, if there's an opportunity for one of our products or services to support that you would consider us for that. So in terms of that advice, I would utilize people within the bank, within TD Wealth, who may have other clients who have been in similar situations to you as well, and can share the expertise that they have developed from that. But then again, there's some really great information with different accountants and lawyers who also put information out into the world. The challenge right now with a lot of this is quality control. And how do you know that what you're looking at is actually accurate? And we see within the tax world, for example, we've seen so many changes in the last 10 years that it really is a moving target in terms of making sure that you have up-to-date information, and that you're not working with the most current version of the law, or even just standard policies and procedures. So I would suggest that we can help you navigate all of that. We can happily introduce you to other people within the community that we work with. We don't, we're very careful about the references that we would give. We will always give you more than one name, but ultimately what we're trying to do is just give you a team of people who can collectively come up with the best outcome for you, and kind of vet each other's plans for. It may even be that there's a really great suggestion that works really well from a tax perspective, but that we need to bring in another partner to look at that from a different perspective to see what the trade-offs might be by pursuing that particular path. Nancy?
Yeah, I'll just interject a little bit here and say that to Nicole's point, we're more advice-based, right? We want to be able to provide that advice so that you can make these decisions informed. So when you're looking at practices and valuations, we're happy to walk through them and provide our guidance and advice on what this is. So we spoke a little bit earlier on as saying maybe it's valued too much, or maybe it's not right for you, and so forth in this situation. But we're here to kind of just dissect those pieces of the puzzle as you move along, making a decision, right? So whether it's us providing that to you, or bringing an individual like Nicole, for example, because she's on the screen, or whomever, to provide that advice and be there along the process. So, but the valuations is key. Like, we look at these day in and day out, and to be able to give you our Ross, I'm going to steal your tagline, the sniff test, you call it, right? To be able to kind of provide some guidance and advice is what we're kind of here for you on that.
Mm-hmm.
Yeah.
Awesome. Yeah, I would love to hear from anybody in the audience who's watching what resources they've come across. I know that there are some different veterinary specific consultants who have been able to come into the space of valuation in helping to support practices in making these decisions. I know John Tate, who was affiliated with the University of Guelph when I was there, has been in this space a long time. I think he's getting close to retirement finally himself. Speaking of retirement, my vet group is another one, legacy valuations, at least on the side of looking at the practice. Yeah, I think that's what Shannon is typing up in the chat as well. So yeah, and Shannon also writes, I am able to help practice owners as well with any discussions on valuations based on the desired needs of the practice owner and the team. I'm happy to help on a different level. So yes, and of course, all people, I mean,
you're working with somebody who is not willing to partner with your other, their partners. That's not a good sign, right? I mean, collectively, we are all trying to help our clients, and we might be bringing a different lens to it. But I get very suspicious when a lawyer or an accountant or a business evaluator will not kind of meet at the table and have a conversation about it. And work together for the best solution. Yeah, you should expect that.
Yeah, that's great advice. That's the sniff test. Doesn't seem right. Nicole, we may have touched on this comprehensively enough already, but the question was that there's been some tax law changes recently. How should I take these changes into consideration when considering my retirement planning? Should I be doing anything prior to the rules changing in June? I don't know if you want
So
to
just just to
yeah.
level set for everybody, the proposed changes were that have been announced is that currently the inclusion rate for capital gains, so that's the amount, the difference between your cost base and the fair market value or your proceeds of sale, that is your capital gain. And currently 50% of that is included in your income and is subject to tax at your marginal rate. And that is true for individuals, for corporations, for trusts. It is all the same 50% inclusion rate. And what is changing or proposed to be changing is the inclusion rate for individuals will increase on gains in excess of 250,000. Again, this is only realized gains. So it's only when you sell it, when you have a disposition for tax purposes, that would be, that you'd be subject to those rules. But for corporations and for trusts, there is no $250,000 buffer with that, where you're subject to only 50% inclusion rate. You will, on your first dollar of income, be subject to the higher 2/3 inclusion rate. So for individuals on amounts over 250,000, and for trusts from their very first dollar, and for corporations from their very first dollar, will be subject to this higher inclusion rate and essentially a higher tax. And this will show up in a few different ways. So it'll show up on the assets within your corporation to the extent that you are selling an asset, or maybe you have a portfolio in your corporation, that will be subject to that higher inclusion rate, 2/3. And the difference between dividend income and capital gains income used to be much larger than it will be going forward. So in terms of some of the investment decisions you might be making within your corporation, you might be choosing to look at your portfolio and see whether or not you want to be doing different things for your investments. Life insurance owned within a corporation may provide an even better after-tax outcome than it had previously. So that might be something to explore as well. It will impact the math. And so if you've done the calculation before on terms of how you want to fund your retirement or what you expect to receive on the sale of your business, there is some math that needs to be done. In terms of should you do anything before June 25th, again, we don't have any legislation. So it makes it really hard to know what the best thing to do is. Generally speaking, if you are planning to sell something this year anyways, yes, doing it before June 25th is probably something you should be looking at. If you are thinking of selling in the next couple of years, you might be thinking about accelerating that as well. But otherwise, and we have a calculator where we do the deep dive and we compare the where's the break-even point of doing different things. And generally speaking, if you are the deferral advantage of having the funds within the corporation is still going to be the preferred approach. But where you have significant shareholder loans or significant capital dividend account where you can pull money out tax-free, there may be value in pulling that money out, holding it personally, and actually collapsing the corporation. So there is some, I'll say the math has changed with these rules. We don't know yet whether or not we'll be able to make an election to crystallize some of those gains, or what the process might be, but it will change the conversation going forward for sure.
Wow. So it's very fluid right now, like between the tax, I should say the interest rate changes, yeah, and these potential laws coming into effect. That's a lot to consider. Again, I can't stress it enough. Another reason to rely on experts like you to navigate that, especially for those like me who are not so financially savvy. Thanks so much, Nicole, for explaining that. We are coming up on the end of our time, but Nancy, I have one last question that I wanted to ask, and then I'll open it up to the entire panel to share any last thoughts. So as female, if we envision our, female practice owners or business owners, what general advice would you have for those in navigating finances related to family, housing, life, all of these things? Like, is there any kind of last advice that you would leave with us?
Yeah, I think excuse me, the last and the first and for lifetime advice is having a network of individuals around you, of experts, is the key. For myself, like whether you're self-employed or not, I think it's crucial for you to have accountant or lawyer. It's never too late to be talking about a will, or early to be talking about a will, even for myself, right? So definitely from a business owner perspective, you definitely want to surround yourself with. So I've always done that, and I think that's been great, and I continue to do that, to surround them, because then I can focus on what's best for me, whether it's my career development or my family life, right? So we at the end of the day, give back time to yourself to be able to do what you enjoy doing when surrounding yourself with these experts around you and having that network. So at any point in time, you can ask and rely on them for advice. So I think it's the biggest piece of advice I can give.
I love that. Well, I will just open it up to everyone then on the panel for any final words of advice, wisdom, suggestions, comments.
I'll interject here since I've been quiet the whole time. You're
Thanks,
not
Ross.
in this alone. I don't try to figure out what's wrong with my poor pup whenever he's sick or not feeling well. I enlist the help of professionals. We're all good at what we're good at. Surround yourself with experts, make sure they match your personality and they share the same vision you do for the future. And always continually hold those people to account and touch base with them regularly to make sure that you're progressing the way that you want to and you're getting the advice that you need. And I say this to my kids, no question's a dumb question if you don't know the answer, right? Yeah. So make sure that you've got that team around you that's going to help you get from A to Z in the most successful and simplest way possible, because life's not easy.
Yeah. I think, just to further elaborate on what Nancy said earlier is, having people around you to help take care of certain things will help you get back time to focus on what matters. I think time is very key, and you also want to dedicate your time to building your practice and, working with your patients too as well. Trying to manage your own investments can be very difficult, and it is time consuming. Relying on a professional, I think, would be the best option. They can monitor that portfolio, make necessary adjustments as the market changes too as well. Imagine the time that you would have to spend to do that. And it's just not something you could just do on a whim. There's research that goes into making those portfolio decisions too as well. Looking at all the different analytics and understanding what's a good investment or what's a good strategy. It's not just something you can wake up and say, hey, okay, I'm just going to buy 100 shares of Tesla. I'm going to buy 100 shares of Google. Markets are always changing. Interest rates are changing. And as Nicole mentioned earlier, we're living in a world of compound interest. So the earlier, the better. And just trust, a team of people and to help you with those things so you can focus on what matters.
Yep.
I love that. You couldn't have said it better. And I definitely am a person who gets very stressed when I'm having to navigate things that are out of my comfort zone. And I think it's easy for us to say, well, if they can do it, I can do it, I can figure it out. But the time that it takes to figure it out, the stress that goes with like, am I making the right decision? Just for me, I will lean on the experts any chance that I can for anything, whether it's accounting, investments, insurance, or otherwise. Shannon, I thought I saw you unmute yourself. Did you have something to add as well?
Oh, I was only going to echo what everyone was saying, but I think one of the biggest concerns and biggest advantages that we have with this type of webinar, concern wise, is that I do talk to a lot of partners in the veterinary space, new owners, existing owners, and I think the most important thing is to know what your options are. And you know, this series has been excellent for really diving into that. It's something that we don't take a lot of time to do when it comes to the operations and the financial pieces. So really, I hope that this flourishes about the internet and a lot of people take the time to watch this webinar.
Yeah. Oh, well, thank you so much for saying that. I am going to share my screen one more time because I do want to just reiterate the information from the panelists who were so kind to share their time and their energy and wisdom with us today. So if you do wish to get in touch with anybody who was on our panel today, you've got their email addresses here. And further to that, we do have the remaining, or I should say the previous 2 episodes. So I will be sharing those with everyone in addition to the recording of today's episode as well, or today's session. So for everybody who registered, you can expect that via email, and we'll make sure that this definitely gets circulated as well. I honestly am like blown away by the amount of really helpful information that we have been able to share and discuss and uncover in all 3 of these sessions. So I'm really excited to get this information out there to more individuals who are either in the current space of practice ownership or even just thinking about it. So the more students and new grads and RVTs, you know, that we can get thinking about this, the better. So thank you so much, everybody, for your time.
And I would like to send a special thank you to Marie and Shannon too as well for really working with us and delivering this series of content. You guys have been amazing, Marie, your work and putting this together, and we look forward to continuing to put on these informational sessions on a ongoing basis.
So helpful. Great. Well, thank you, everybody. Have a wonderful rest of your day.
All right, take care. Bye, guys.
Take care.